Profiting from crypto trading can be a rewarding endeavor, but it requires careful planning, diligent research, and disciplined execution. Here is a detailed description of the steps you can follow to potentially profit from crypto trading. 1. Educate yourself. Begin by gaining a solid understanding of cryptocurrencies, blockchain technology, and the fundamentals of trading. Learn about different types of cryptocurrencies, their underlying technologies, market trends, and trading strategies. Numerous online resources, courses, and books are available to help you learn about these topics. 2. Set investment goals. Clearly define your investment goals and risk tolerance. Determine whether you are looking for short-term gains through day trading or long-term investment opportunities. Establishing clear objectives will help you create a focused trading plan and manage your expectations. 3. Choose a reliable exchange. Select a reputable cryptocurrency exchange that offers a user-friendly platform, reliable security measures, a wide selection of cryptocurrencies, and reasonable transaction fees. Conduct thorough research and read user reviews to ensure the exchange aligns with your requirements. 4. Develop a trading strategy. Design a well-defined trading strategy based on your goals and risk tolerance. This may involve technical analysis, fundamental analysis, or a combination of both. Consider factors such as entry and exit points, stop-loss orders, profit targets, and risk management techniques. 5. Stay updated on market news. Stay informed about the latest news, market trends, regulatory developments, and influential events within the crypto space. Stay connected to crypto communities, follow reputable news sources, and leverage social media platforms for real-time updates. 6. Conduct thorough research. Before investing in any cryptocurrency, thoroughly research the project, its team, adoption potential, and underlying technology. Analyze the project's white paper, roadmap, community engagement, and partnerships. Understanding the fundamentals of a cryptocurrency can help you make informed investment decisions. 7. Implement risk management. Manage your risk exposure by diversifying your portfolio. Invest in a variety of cryptocurrencies rather than putting all your eggs in one basket. Set stop-loss orders to minimize potential losses and use position sizing techniques to determine the appropriate amount of capital to allocate to each trade. 8. Practice technical analysis. Utilize technical analysis tools and indicators to identify trends, support and resistance levels, and potential price patterns. Technical analysis can help you make informed decisions about when to enter or exit a trade. However, remember that technical analysis is not foolproof and should be used in conjunction with other forms of analysis. 9. Start small and scale up. Begin by trading with a small portion of your capital. This allows you to gain experience, test your strategies, and understand the dynamics of the market without risking substantial amounts of money. As you gain confidence and experience positive results, gradually increase your trading position size. 10. Embrace discipline and emotional control. Crypto markets can be highly volatile, and it's crucial to maintain discipline and emotional control. Avoid making impulsive decisions driven by fear or greed. Stick to your trading plan and only deviate if there are valid reasons based on your analysis. 11. Monitor and evaluate. Regularly monitor your trades and assess their performance. Keep track of your gains and losses, evaluate the effectiveness of your trading strategy, and make adjustments as necessary. Continuously learning and adapting is essential for long-term success in crypto trading. 12. Consider seeking professional advice. If you lack the time, knowledge, or confidence to trade independently, consider seeking professional advice from financial advisors or crypto trading experts. They can provide insights, personalized guidance, and investment strategies tailored to your needs. Remember that cryptocurrency trading involves risks, and there are no guarantees of profits. It's essential to invest only what you can afford to lose and understand that the market can be unpredictable. Conduct thorough research, stay informed, and approach crypto trading with a long-term perspective for the best chances.